Hi everyone, this is Eric from Traders Helping Traders with this week's Tricks of the Trade. Here's a little something that you may not have noticed before. As you probably know, trading is all about observation, being able to recognize certain patterns and occurrences that seem to happen time and again in a market. And as you probably know as well, the best opportunities for getting back into a trade are in the countertrend or pullback phases of a market. But have you ever noticed how long the pullback phase of the market actually lasts? Yes, I know, sometimes it looks like the pullback phase is rather quick, and sometimes it looks as though the pullback is rather prolonged. But here's a little tip. Most pullbacks will occur for up to 4 bars. Now this doesn't seem to matter whether you're trading a 5-minute chart or a daily chart or a weekly chart. A lot of times the pullbacks will only consist of 4 bars and then the market will resume with the trend. Now the important part of recognizing this is that you have to first be able to recognize that the market is in a trend. Obviously, if the market is not in a trend, you're not going to be able to recognize a pullback. But here we have the October feeder cattle chart, and you can see quite clearly that the market was in an uptrend when it placed a high, and then it promptly entered a pullback phase. Well, let's take a look at how many pullback bars there were. And you can recognize a pullback bar because the market is holding the existing high and trading lower. So here we have 1, 2, 3, 4 bars, and then you'll notice that the next bar, the market resumed the trend. Here the market put in a high, came down, made a swing low, a lower swing high, which indicates that perhaps the market is now in a downtrend. And take a look at how many pullback bars there were contrary to this original downtrend. 1, 2, 3, 4. And then the market continues lower from here, enters another pullback phase. 1, 2, 3, 4. If you entered below the low of this green candle, you would have done just fine as the market tailed off again. Now, there will be times that the market will not necessarily follow through after the 4th bar. For instance, if we take a look back here, we can also see that the market was in an uptrend, made a top or a short-term top, came down, had 1, 2, 3, 4 bars. Now, after this 4th bar occurred, we would probably be looking for the market to continue higher from here. But in fact, it continued lower. So in that instance, I simply wait for the next sign of support in an uptrending market or the next sign of resistance in a downtrending market and take my signal from there. So in this particular example, my next signal actually came a few bars later off of my red-green bar combination, and that would give me a buy signal, and therefore I would buy above the high of this green candle, and you can see that the market continued higher from here. You'll see the same thing happen when the market reverses to the downside and takes too long to complete. So for instance here, if obviously we would not have seen all this happen just yet, at this point in time when this pullback phase occurred here, we would still suspect that the market was in an uptrend. So now we would be looking for a chance to get back long. 1, 2, 3, 4. We would expect the market to rally from here, but in fact it continued lower. 2 bars later we have our support, and we would look to buy above here. And you can see the market gave us a little bit of heat, but continued high enough that we should probably hit at least our short-term profit target. But here's another interesting note, that this signal combination is so powerful that if the market reverses and happens to take you out for a loss, well then it's very likely that you are looking at a change in trend. And that's exactly what happened here, where we got our signal to go long. The market struggled a little bit. It would have filled our first profit objective, which is usually relatively tight. But after that, the market reversed and headed lower. So once again, it was unable to sustain the signal, in other words, the buy signal, and therefore it's actually an early warning that the market might start heading lower. So play with this, paper trade it. I think you will find it a very interesting and very profitable phenomenon. And that's this week's Tricks of the Trade.